I'm really happy with this backtest. 695% since 2020. What's going on, everybody? It's Ryan here, CEO and head quant at happytrader.io. For this particular backtest, we're going to be looking at the 45-minute chart. This is going to be a swing trading backtest, and you can see some of these moves look promising. This particular instrument, the Micro NASDAQ and the Micro ES, were launched in 2019, in May 2019 to be exact. Deep backtesting and TradingView is only going to go to 2020. We're going to do a May 2020 back test up to 2024 and get all the data that we possibly can. We have our long only strategy loaded up. You can see that it superimposes over our signals. So we have our date pre-populated. Deep back testing, I'm going to toggle off and on just to make sure we are completely set up here. What we're going to do is cut over to the Trade margin requirements page, and you can see for the MNQ, holding overnight's almost nothing, but you are going to need a couple $1,000s to trade these futures because they're super volatile. Now, I should make note, this is the NASDAQ. You can see that if you trade the ES, the margin requirements are less, both intraday and overnight, if that's your cup of tea. But a happy trader performs better on the more volatile big tech NASDAQ 100. So we're going to start out with a $2,000 account size in our back test and see if we get margin called. And then we're going to see what kind of returns we generate using the back test, using our strategy and our indicator, which you can grab and check out at happytrader.io. And without further ado, let's jump into the back test. The first thing we want to do here is just set this to 2,000 for the initial capital. Now, contracts, we want to make sure we set up as one pyramiding. We don't want any successive orders in the same direction. We have such a good product now that's been refined over the past 2 years that frankly, we don't feel that we need to add scaling yet. So that's something that we may add in the future. Just wanted to kind of touch on that. That's why we turn pyramiding off. Commissions and slippage, you're going to see that it's not a big deal on the 45-minute time frame. There's probably not going to be that many trades. A little bit of a spoiler alert there, but this is going to be over a 4-year period. So we're going to set the capital. We're going to make sure we have our date range. So way back to 2020, May 24th specifically. This is the first day available for the deep back testing for the MNQ. I'm going to change this date here to the 15th, representing today. And we're going to go ahead and just double check our parameters. All looks good. We have our back tester up. All there is to do is run the report, and here we go. Okay, let's go to the overview. Okay, so this falls right in line with Happy Trader conventions, 36% profitable. If you're a subscriber or if you're a fan of the channel already or the indicator of the product itself, you'll know that we lose a lot of trades, but we have a positive expectancy because our winners are dramatically larger than our losers, right? That's where we end up with that percentage gain, obviously, that you can see over here. We're doing over 100% on the capital invested, and we're only taking a slight drawdown. So let's pick out some of the negatives. Like I said, we're only winning about a little better than 1 out of 3 trades, but that's how we designed the product. So the expectancy curve for it to be large doesn't depend on the win rate. And that's something I touch on if you subscribe to the channel. You can see in some of the other videos, some of those knowledge nuggets that I drop in reference to that. Now, max drawdown, we took a 61% drawdown. It is the NASDAQ. We are trading futures. There is no free lunch here on Wall Street or anywhere in life. We get you the positive expectancy and you're going to have drawdowns. Even if you're buying stocks that Warren Buffett himself buys and the market crashes, those stocks are going to take drawdowns, and you need to be able to size your position appropriately. If it affects you emotionally, you're probably oversized, which is a great reason to have the micros. So you can kind of get those mind calluses into place and just kind of look at this as statistics and less like losing or gaining money or attaching your ego to it. So, those are the negatives. We took a little bit of a drawdown here. It looks like to about 1,500. There would have been a $500 margin call. You would just top off the account and you're good to go. And you would get notified of that. It looks like pretty good returns for not having to do much except put $500 back in. So what you can do here as far as hedging, if you enter at a spot that puts you at a disadvantage, like right before a crash or a major drawdown in the market, that's super unfortunate. But you will see that that's a great buying opportunity, number one. Number two, you can simply delta hedge these positions. So you can buy the MES to hedge against the MNQ. It's not like we're going to see the MNQ go up to this peak while the MES is completely tanked, right? So the markets are going to move somewhat in lockstep, but the Nasdaq does tend to outmaneuver and outmove and outpace the S&P 500 for the most part. So the equity curve looks really good here. We only had 267 trades over this long period here, so the commission is very negligible. If we go into the actual trade log, we can really go back in time here and see we're just maintaining one contract the whole time. We're not even scaling. You can scale this if you gain $1,000 in your account. You could add a contract. If you go under that $1,000 threshold, you could remove the contract, for instance, right? So you do things like that with scaling. But you can see here, we will have strings of losers that are smaller, followed by bigger winners. Let's just kind of go through that a little bit. You can see one there. You can see one there. This one here, not the biggest winner, no problem. On a lot of the losing trades, if not all of them, there is an opportunity for a run up. So this is not to say that you have to trade from signal to signal. This is just demonstrating the high ability of this product to trade and on a rudimentary and basic basis. So that's really why we're going over this. But you can see here a 422 winner. We had 119 loser, 578, 923, 146. And then if we go up to more recent, you can see that we have a $34 loser, a $55 loser. We have this string of losers, but look, under that was a $700 winner. Then we had a 277. You get the idea with that. What we're looking at here is the average trade. What are we doing on the average trade? It's 1/10 the size of the NASDAQ contracts. We'd be doing $520 on average over a 4-year period on the full size NASDAQ. Now on the micro, we do $52 average. We're taking all of the 4 years of trades and averaging them out. That's where we're getting the positive expectancy. That's where we're getting that win rate to be lower. But because the winners are so big, that's how we're getting this accomplished. Now, you can use other derivatives with this type of thing. You can also use scalping techniques. This is just showing you that Happy Trader is the best performing indicator out there. We have all the data points in place. We can look at the performance summary. There's not really much else to unpack with this back test. It's a really good back test. This is one that pretty much anybody's going to be happy with if they're running it through any type of system. And all you have to do is go into your alerts here and you can set your buy and sell signals there. You can even set it up to go to a webhook in the notifications. You can also get email notifications, app notifications for Happy Trader. Just visit happytrader.io for more information on that. That's going to be the back test for 2020 to 2024 as far back as we can go on the micros using just one single contract. And you can do some dreaming and kind of figure out how that would scale if you were to add some contracts once you start adding to your account size, which gets really exciting. Stay tuned. We'll be doing that in the future with the scaling. We will be modifying and back testing and figuring out this market together. This is fantastic information. If you retain it, the world is your oyster when you're doing stuff like this, right? So if you're able to maintain this positive expectancy, it's very hard to do, and it's really hard to beat the S&P 500. So I'm going to leave it right there. I'm really happy with this back test. 695% since 2020. I'm totally cool with that, right? I think that's going to do it for the video, folks. My name's Ryan. I'm the CEO and head quant here at happytrader.io. Have a great day and happy trading.